I want to get back to our guest, Bill Whyman. He's the head of technology research strategy at ISI Group, talking about the Intel results that are expected to come out after the bell today. But also, Bill, you said something very interesting right before the break, which is that you expect the growth rates for technology to perhaps peak or level off in the second half of the year. And why is that?
So if you look at a lot of the key indicators of tech, things like semiconductor shipments, tech orders out of Taiwan, we've been recovering in tech for 10, 11 months. And if you go back and look in 02 and 03, how long did tech recover coming off of the bottom? Generally, it was around 12 to 16 months. So the point is, we're well through this. We've been into the recovery for almost a year now. In addition, if you look at other leading indicators that drive tech spending, things like the semi-cap book-to-bill, the ISM,
right.
These measures are likely to roll over and slow. Not that they're bad, but that for tech, if growth rates start to slow, that's a problem for tech equity.
Bill, let's throw something else into the mix. The fact that if we're talking not just about Intel, but semiconductor stocks, generally speaking, that they've all had a massive run over the last 12 months. I see none at this stage that are actually looking at negative returns over that stretch. So are you a buyer or seller of chip stocks?
I think over the first half of this year, I would be a seller. I would be selling on strength. Look, the issue isn't are things getting better in tech. The answer, in my view, is clearly yes. But you have to juxtapose that with we're well into the recovery. Tech was up 60% last year. That's a big number. And from the bottom, it was up almost 90%. So our view is that a combination of slowing leading indicators combined with a market that's already discounting a lot of recovery, we want to be switching out of semiconductors, which are the most pro-cyclical part of tech, into software that's the least cyclical, and to other segments that have structural growth, because I think that's going to be the big source of outperformance in 2010.
Like what, Bill? Like what?
So let me give you a couple areas. Mobile. It's not just about handsets and better networks. We're now seeing a huge range of applications come on. This is causing a big spectrum shortage. So the tower stocks, for example, AMT or Crown Castle, the FCC chairman said we have an impending spectrum crisis. How do you solve that problem? It's not easy. So it looks to me like some of the tower companies, and I think the whole mobile space, mobile advertising, I think Google's going to be a big beneficiary there, too.
Okay, Bill, we've got to leave it there, but thanks so much for joining us and talking about technology, certainly something that we've been following really closely on this program. Bill Whyman of ISI Group.